Okay, welcome to this meeting. So today, what we'll be discussing is firstly, we first discuss how you can, that is the characteristics of what a major liquidity. Then the second one is point of interest. So the third one is structure. The fourth is the model that we trade. Then the fifth one is the inducement. So this is all that we'll be doing today. So firstly, now we start with what? Major liquidity. So normally in liquidity, we have what we call external and major liquidity. And this is perfectly what? Structural movement. That's why market is making a lower low, a lower high, a lower low, a lower high. So how to define a major liquidity? That means a high in a downtrend, a high that you're not expecting price to what? Read. A high that you're not expecting price to what? Read. So the major one, the major liquidity are the one that we don't expect market what to read. Why the lower one, which is the external liquidity, are what? Are liquidity that's what that attract price. These are liquidity that what attract price. So which are these lows? So those lows are what we call external liquidity. So now how do we define a major liquidity? So to show that this is a major liquidity, now firstly, we have what we call point of what? Liquidity. So these are the characteristics of what? A major liquidity. Point of what? Liquidity. So when a high or a low point what? Liquidity before a break of structure, we consider that high or low as what? A major liquidity. That means we are not expecting market to read it. If market read it, that means we have what? We have gotten what we call change of trend. That means we have gotten BMS. So if it's in a downtrend, a hunt after a market hunt liquidity in upside, a market what? Break structure to downside. The market again break that high, that hunt that liquidity. We call it perfect BMS. So what you expect now is to what? To look for buy. You don't look for sell any longer. So if it happened, the next after that BMS, the next thing that you look for is buy. Now another one is what? The second one is what we call stop hunt of what? Liquidity. A high that what? Down stop hunted what? Liquidity. Now we explain this. We explain these things in chart and in everything. Now the third one is what? Break of what? Strong low in a what? A downtrend, or a high, a strong high in what? In an uptrend. We see an example of it. Now the fourth one is what? Induce liquidity. A high or a low that what? Induce liquidity. So now that is that. Now this is number one. Now market has shown us that we are on downtrend. So at this area, market was giving us a lower low, a lower high, a lower low, a lower high. Now let's take, for example, you have what? Around this area. So let's say, for example, around this area, you have here as our major low. You have this area as our what? The external liquidity. That means we are on downtrend. External liquidity. We have major liquidity. So now, as market has given us this little BMS to the upside, so market now give break of structure. That is minor break of structure. You already know that you are on downtrend. You already know that you are what? On downtrend. So as market gives this little break of structure, that means you are still looking for sell at what? A good level. At what? A good level to join the sell. So as market has done this, market creates higher high, higher low, higher high, higher low, then a higher high, then creates a lower low here. Looks like it breaks structure to the downside. But we explain this thing when we're talking about inducement, how it works. So it looks like it breaks structure to the downside before giving this last high, then breaking this low. So this high, this very high is considered as what? A major liquidity. We don't expect price to read that very high again. Why? Because it hunted liquidity. It hunted is very high. This is the liquidity that price hunted. This is the very high that what is very high hunted before selling. So that is what we call liquidity what hunt. So it hunted what liquidity before breaking this down structure to the downside as what major BMS. So since market has given us this what BMS to the downside, that means that very high, this very high is a strong high. So that is what we call major external liquidity. If price make any mistake to break it, then look for the next external liquidity, which is the last high in that what where market start that downtrend to what for you to what continue the upside. So you consider this very high. Anytime market break it, that means we have gotten what a real BMS to the upside. Anytime market break it, after even if it's on lower time frame, after it has what hunt liquidity. So majorly the time frame that we do focus on for structure is daily time frame. If you are in let's say for example you are a intraday trader, time frame you will focus on is what focus on daily H4 and H1, even if you don't know what is happening on weekly. With what we teach today, you can stay on H4 for complete a week as what a scalper or a day trader without going to what higher time frame to know what price what is doing. Now, so after market give us this is considered as what major external major liquidity. So since this is a major liquidity, we don't expect market to reach this major liquidity because we are on downtrend. So the next thing we should expect is for market to create a lower high again and create a lower low. So this is one. This is what one. Okay. So this is one. So now this is what characteristics of what a strong high, which is what your major liquidity. So if this is your major liquidity, the next thing that you should expect is for market to create a lower high, then a lower low in a complete downtrend. In what a complete downtrend. So another one is this. Now here is where we have a lower low. Here we have a lower high. Now we had a new lower low. So after a lower low, we got a little break of structure here as what a range structure. So since now we have gotten this little break of structure or minor break of structure within the range. So now market is coming for what corrective wave to the upside. So when market is coming to for corrective wave, before it get to this very high or before you get to what very point of interest around this area, before market get to the what very point of interest around this very area, before market get to the point of interest around this area, look at what market did. Market first what create what liquidity. It creates what liquidity as what double top, which is the second what example, which is the second what characteristics of what major liquidity. So this is what we call what it created what double top, which is what a stop hunt. Why single top like this after it would break a minor structure, it hunt to the downside, hunt to the upside before breaking structure to the downside. So this is considered as what a hunt of what liquidity. Why? Because it's what only one high that it hunted. So why this one here? It created something like double top before what breaking structure to the downside. So whenever market do this, you consider this very high, this lower high. You consider this lower high as what your major liquidity. That means you are not expecting price to reach that very high. You consider that very high as what major liquidity. That means you are not expecting price to what reach that very high since you are on what downtrend. So you are on downtrend, you follow it perfectly. Now after that, now another one is this. After market break a low, we had a BMS to the downside here. After market break this low, this is one, this is two. Now after market broke this low here as BMS or break of what structure. Now market, before creating this corrective wave, market create what a hunt of what liquidity. That means a hunt of what liquidity. Market what create what a hunt of liquidity. So when market create this hunt of liquidity, this is your what your normal high, a lower high, and that is a lower low, a lower high, then a lower low. So you expect market now to create what? A lower high, unless it broke this high. So if it used this low, this type of low to break a high, we'll explain that when we are in uptrend. But we are focusing on what? Downtrend here. So everything that we are showing here is when market is in a downtrend. In what? A downtrend. Now, since market now at this very level create a lower high and broke this low that haunted on this downside, that create this sign, or that haunted on this downside. Like I said, here is where we do use Asian range. One market is using what? Creating a hunt on the downside. You can use what? One standard deviation based on point of interest. So now market now create a lower high. So after market create this hunt or a stop hunt on this downside here, a stop hunt on this downside, which is just like this second one here, but different scenario. So now, since market now has created this hunt here, double bottom, then hunt it on the downside before continuing this corrective wave to the upside. So when market do this, anytime market break this low that hunted on this downside before creating a lower high, this is considered as what? Major liquidity. So that means you're expecting market now to what? Form a lower high and form a lower low. So this is what we consider as what? Major liquidity. Now another one is what? When market induce liquidity. Now market induce this liquidity either in secondary or primary point of interest, which we will explain again. So market hunt liquidity here. Market hunted liquidity here as what? Inducement. As what? Inducement. So market hunted this liquidity as what? Inducement before creating the low. So once you see market hunt liquidity and create a low, so this become automatically a major lower high or a major external liquidity. This very lower high here, this high is what now? What? A major liquidity. So since this is a major liquidity, why this is external liquidity, the next thing you should expect is for market to create a lower high and create a lower low. So these are the four characteristics of a major liquidity in a downtrend. In a downtrend. Now in an uptrend. Now this is number one. Now market is an uptrend. Market is making a higher high, a higher low. Now you notice that before market now make this higher high, it looked like it broke structure here a little, but that is what we call inducement. It induced liquidity on the upside, which we explained today. So now market now create a lower high here. It create a lower high, a lower low, a lower high, then create a lower low instantly before breaking a high. So it hunted liquidity, just like this is not in an uptrend. This is what in a downtrend. So here market hunted liquidity. This is what we call liquidity hunting, or hunt of liquidity. So market hunt liquidity before creating a higher high. So the next thing that you should expect now, because this is not in an uptrend, so you expect market to create a lower high, then a higher low, then a higher high. So after this higher low, the next is a higher high. So because you're in uptrend, so you follow structure perfectly. This is your structure high, this is your structure low in an uptrend. So you follow structure. Now this is where market is still in uptrend. So market now creates a higher high, a higher low, a higher high. Before creating this higher low, it gave a stop hunt, a stop hunt. So after that stop hunt, market hunt that liquidity, which is this double bottom here, before breaking structure to the upside. So this become what we call major liquidity. So the next thing that you expect is market to create a higher low, a higher high in an uptrend. Market should not violate it. If market violate it, that means you have gotten a change of trend. So this is the second one. Now the third one is this. It created double top as liquidity manipulation, which is double top. So after creating this double top, it hunted it, then create a higher low. When market break this high,
When market break this high, this is considered as what? A major liquidity. Then higher high, higher high, higher low, then this higher high, higher low, then a new higher high. So this is considered as what? A major liquidity. That means we are not expecting market to read it. So the next thing is what? You expect market to create what? A higher low, then a higher high. Completely fine. In an what? Uptrend. This is what? In an uptrend. So you follow structure perfectly. Now, another one is this. It induced liquidity before creating a high. It induced liquidity before creating a high. So it induced this liquidity as what? A fake BMS to the downside. As what? A fake BMS, then create what? A higher high. So after this higher high, you consider this as what? Major liquidity. So that means you're not expecting market to what? Read it. So the next thing is for market to create what? A higher low, then a higher high. A higher high. So this is what? The four characteristics of what? External and what? Major liquidity. These are the what? Four characteristics of what? External and what? Major liquidity. Now, now we enter the second one, which is what? Primary and secondary point of what? Interest. Now, primary and secondary point of interest means when market, now let's say, for example, market is in a what? A downtrend. We always have what? Two area of what? Concentration. Here we do look for what? To join the trend, which is the downtrend. Where we do look for what? To join the trend. So the first one is what we call primary point of interest. Primary point of interest is what? The first range within this high before what? Going to this downside. The first range of BMS before market show the sign of going to what? Take out this external liquidity. Now, if this is happening on higher time frame, this is the time frame that let's say on daily time frame, that is the time frame that you will call it what? Your primary point of interest. Let's take, for example, market creates a high, a low, a high, a low, a high, a low, a high on daily time frame. A high, a low, a high, then before creating a low that broke this low. From this area on this daily time frame, higher time frame controls lower time frame. From this area to this high is your what? Your primary point of interest, where we do look for reclaim block, your sponsorship candle or your sponsored candle, your QML level, where we do look for those things to what? To take the sell, to join the sell. Why? Now let's already draw something here. Now let's take, for example, this thing that you are seeing here is the same thing. Let's say this is daily time frame. On H4, on daily time frame, this is how it looks. On H4, this is how you are seeing it. Okay. So now this is what? A low, a lower high. This is where we have what? The first BMS or range structure or minor BMS. So since this is where we have range structure or minor BMS, this area from this low to this high is what we call primary point of what? Interest. From this area to this high is what we call primary point of interest. So from this very first area where market gave the first sign of BMS to give this corrective wave to the upside, where market gave this first sign to give this corrective wave to this upside, from this low to this high is what we call secondary point of interest. So secondary point of interest is from the very first break of structure for a corrective wave. Why primary point of interest is what? The first minor break of structure or range structure break. Or range structure what? Break. So this is what? In a downtrend. In an uptrend, Now let's take, for example, in an uptrend, here we have what a break or structure to the upside on daily time frame. Now, from this very area of the first area of BMS, for market to show us this sign of the downside, that it will what give us this sign, that it will what give this sell sign or this pullback here. That first area is what we consider as what secondary point of interest. Why the first area market shows sign that it will buy is your what primary point of what interest. So this area from this low to this high, from this very low, this recent low to this recent high on H4 is your what secondary point of interest. Why from this very low to this new high the market broke as what BMS, for market to show sign that is going to take out that external liquidity is your what primary point of what interest. That's your what primary point of what interest. That's what primary point of interest. So that's that. So that is our point of interest. We have talked about what major liquidity. Major liquidity. So we have talked about what major liquidity, which is for the first one here. Here, when market what front one liquidity, we explain it in terms of what inducement. Now, because we have now understand or grab a little understanding about what primary and secondary point of interest. Now, when market is making a higher high, a higher low, a higher high, a higher low. Now notice this. After making this higher high, now market creates a pullback, a pullback, a pullback, a pullback around this area. So now this is where we have what a BMS to the upside, a break of structure to the upside. So now the first one we talk about is what in the inducement, we talk about what secondary inducements. Secondary what inducement. Now secondary inducement means when market use secondary point of interest, just like what we explained. When market use what secondary point of what interest to what give what a continuation of that what uptrend. Secondary inducement means when market after market gives a BMS, after market gives what BMS to the upside here as what a break of structure. So now after market gave us this break of structure, now it creates a high, a low, a high, a low. None of these highs grab liquidity and what tested secondary point of interest. And tested what secondary point of what interest. None of this what lows grab liquidity or tested what secondary point of what interest. So now when market create this, we do call all this area as what liquidity. We do call this lows as what liquidity. We do call this liquidity or secondary inducement. So market will come and induce all these lows that it created after this first BMS of this major or of this external liquidity. So after this BMS of this external liquidity, this is what we call what? A what? When market create this, we call it what? Inducement of what? Secondary point of what? Interest. So this is when market use secondary what? Point of interest. This is what when market use what? Secondary point of interest. And most times when market do use this is when market do use secondary point of interest is when it create what? Distance and what? Momentum. What do I mean by distance? So after this BMS of this very high, market create what? A sharp candle. That means buyers powers. So after BMS, buyers are not yet weak. They are not yet weak. They have not yet closed their order. So they continue buying before what? Taking a little what? A little breath. Before taking a little breath. Then after taking that little breath, then they now came to what? Induce liquidity. So when market give this area as inducement, other smart money traders will be calling this area a BMS. They are looking for sell. They are looking for what? Sell. But that is not your what? Your own case. You already know what market we do. You already know what market we do. So this is what we call secondary inducement. Anytime market do this, when market create liquidity, then the next thing is what? You look for buy. You look for buy to join the what? The buy move. So market now use here as what? Secondary point of interest. Why this area is your what? Primary point of what? Interest. So market now use what? Secondary what? Inducement. Market use what? Secondary inducement. So market use what? Secondary inducement. So this area is your what? Inducement. So this area is your what? Inducement. This area is what? Inducement. So market induce all these lows to give what? A higher high. So now this become what? A new structural break. So this become what? A new structural break for you to what? Continue this upside. For you to continue this what? Upside. Now, another thing is, this is secondary inducement. This is secondary inducement. So now, after the secondary inducement, you check characteristics of what? Our major liquidity. You check the what? Characteristics of what? Our major liquidity to check if it validates this low. For you to call it what? A major liquidity. For you to call this low a major liquidity. So if it has any of those four characteristics, that means what? Is a strong what? A strong low for market to what? To use it to what? Create a higher low. Then you continue your what? Your structure perfectly. Now we see all this on chart. We see all this on chart. Now the second one in this inducement is what we call primary inducement. Is what we call primary inducement. So this first one that we discuss now is what we call model 2. It's model 2. Now, primary inducement is what? Model 1. Now, what do we mean by primary inducement? After market create a high, it creates a low. It creates now, before creating this, okay, let me use this. Now, now, after this market broke this high, after market broke this high, as what? Primary inducement. That is what market will use now. Now note this, without market doing this, that means it has not mitigated. That means you still have that point of interest very valid. You still have that point of interest very valid. So now this is where market shows sign that it will buy, that it will go to the upside, that it will what? Go to the upside. When market give this BMS here, this minor break of structure here, when market give this minor break of structure as our what? Our what? Break of structure. So when market give this minor break of structure here, now what you should expect is market where market is coming, not what you should expect. Now where market is coming is this low. This is your target if you are selling. If this is happening on daily time frame, so till market take this low, you're not looking for buy. You are in uptrend, but the market take this low when it give what? A minor structural break. So you are not looking for buy until what? It take this low. So your point of interest now should be what? This very area, your primary point of what? Interest. So this low is what we call primary inducement. It's what we call primary inducement. So this low is what we call what? Primary what? Inducement. So this low is what we call what? Primary inducement. So you will not look for, if you are looking for any buy move here, you're only looking for it for what? A corrective wave. For market to give what? A corrective wave. For market to give you what? A corrective wave. For market to use it to give you what? A corrective wave. Then continue the downtrend till what? You get to this primary point of what? Interest before you start looking for buy. So this is your external liquidity. This is your external liquidity, which has shown us that you are completely in what? In an uptrend. So where market show this first sign of BMS is what? Your primary inducement. So when market show this, it comes for what? Primary point of what? Interest before you look for what? Buy. So if market get, for example, get up to this area, start forming any liquidity, anything you do, you trade it according to what? Inducement of primary and secondary point of interest again. So boom, after that, once you get to this point of interest, it can give you minor break of structure or range structure BMS. Boom, it fly to the upside again to create a higher high. So this is how you trade it. What? You trade the inducement with primary and secondary point of what? Interest. With primary and secondary point of interest. So this is what we call primary inducement. We have explained secondary inducement. Now let's re-explain it now, because this is model 1. Primary inducement is what? Model 1. Now secondary inducement is what? Model 2. Now this is it. Now higher high, higher low, market break structure to the upside. It creates a higher low, a higher high, a higher low. It did higher low, higher high, higher low. So market must surely clear all liquidity that market creates after breaking this high for it to become what? A valid secondary inducement. It must surely clear all. So any liquidity it creates above this high, it must surely clear it before what? Creating a new higher high. It must surely clear all. So this last one here, the low, is what we call what? The inducement low. So if market now, after creating this little range structure here, so if market now show you sign that is selling, so your TP, because it has shown what we call momentum and distance here, so your TP should be this very low, not primary point of what? Interest again. Why? Because it has what? It has given what? Enough liquidity. It has created enough liquidity here. So these ones are what we call secondary inducement. So the main idea is this: you always look for what? Buy. So you don't care more about the sell. So you always wait for what? To join the buy move. You always wait to join the what? The buy move. For market to create what? A new higher high. For market to create what? A new higher high. For market to create what? A new higher high. So this is what we call what? External what? Your external liquidity is always your target. Then your secondary point of interest inducement is this what? Very level. Secondary what? Secondary point of interest what? Inducement. Secondary point of interest what? Inducement. So here is where you look for breaker or reclaim block to join the buy. Here is where you look for what? Breaker or reclaim block to join the buy. This where what you look for what? Breaker or reclaim block to join the very buy move. To what? To join the buy move. So this is what we call what? Secondary inducement. Why primary market come for what? Primary what? Primary point of interest is what we call what? Primary inducement. So these are the what? The two type of inducement that we what? Have. These are the what? The two type of what? Inducement that we have. Now that is what? Model 2. Now model 3 is this. So these are the major model that we use. 1, 2, 3. These are the major one that you need. Don't disturb yourself. Now these are the major model that you need. Model 3 is when market creates what we call unsupported high and unsupported low. When market creates unsupported high and unsupported low. Now when market creates a high, after creating a high, higher low. it create a high, then a higher low, a higher high, then before creating a consolidation around this area. Now you will notice that around this area, this area don't stand on anything. There's nothing, there's no special high or any key level that had this very low. So this very low is what we consider as what, or is what we call what? Unsupported low. So that very low is what we call what? Unsupported low. This very low is what we call unsupported low. This low is what we call unsupported low. Before market create what? A higher high. Before market create what? A higher high. So after market create a higher high, when market create this unsupported low, the next thing that you should look for is what? Buy move. So where should you look for buy move? You look for buy move in this nearest, in this new zone that market create here, to look for what? Buy move. So you don't care more about the sell that will happen. Your concern is what? About the buy. So that you will not miss it. You concern after creating unsupported low, your concern is what? To join the buy move. To join the buy move. Where to join the buy move? Your what? Your next range. That is what? Your lower range, which is this first range before this what? Unsupported low. So this is where what? Your next range, where you look for what? This is where you look for what? Buy, to take out the next external liquidity. So once market break this high, this become what? Your higher low. So you're expecting market to create a higher high, then a higher low to be created. So this is idea of what? Unsupported low. In what? An uptrend. In what? In an uptrend. Now, if it's in a downtrend, market create a low, lower high, then create a lower high, so now this area is what? The first area of the base. So this is where you want to look for what? Buy. You join the sell. So why this area is the what? Unsupported high. So this very high here is what? Unsupported high. Why? Because there's no special high, or there's no special area that had this very level. There's no special area that had this very level. So it stands on its own. So this is considered as what? Unsupported high. Is considered as what? Unsupported high. Unsupported. So this is considered as what? Unsupported high. These are what? Unsupported high. So market will use it to what? Induce liquidity. So it become what? Inducement. Market will use it to what? Induce liquidity before creating a lower low. Before what? Creating a lower low. So this is what? Inducement. Now, if market break this high after creating this what? Unsupported low, break this high, we consider this as what? BMS. We call this what? A break of what? Structure. We call this level a break of what? Structure. We call this level a break of structure. That means we are expecting market now to create a higher low, then a higher high. So this is what? The third model that we trade. So this is the what? The third model that we trade. And this is how you trade it. Inducement of secondary and primary point of interest, and this unsupported high and unsupported low. So these are the setup, and it always what present itself daily. Any of these must what present on every pair daily. If you are what? A scalper, it will present itself on lower time frame always. That you can scalp your setup. So if you're a scalper and this thing is happening on 5 minutes time frame, this happening on 5 minutes time frame. So after unsupported low, this is where you enter So after entering on 5 minutes time frame, after entering, your target should be this low as what is kappa, because you what this happened on 5 minutes time frame. Not that it happened on 5 minutes time frame. You enter this level, you start what targeting the next external liquidity based on that time frame, based on higher time frame. You start targeting the next external liquidity. No, this is your target as what is kappa, that you are using this what unsupported low or unsupported high on this 5 minutes time frame or 3 minutes time frame. So this should be what your target. This should be what your target. So that is that. Now let's look at chart. Okay, now let's take, for example, this is British pounds against what US dollar. This is what British pounds against US dollar. Now let's not waste more time. Now on this time frame, okay, let's use high time frame first. Now on this time frame, we had a higher high. We had a higher high, a higher low, a higher high. The market created a lower what? A lower low. That means we have what? A break of structure. In terms of what structure? That means we have what? A break of structure. So since we have a break of structure, market has already taken what? Sell side liquidity. So now what it will do is what? It will go for what? It will go for what? This upside liquidity before it continue the sell. It will go for what? This upside liquidity before it what? Continue the what? The sell. Before it continue the what? The sell move. Because you have gotten what? BMS. So you don't get BMS and expect market to what? Continue. But if it continue, then you trade it as what? Model 2, which is what? Inducement of what? Secondary point of what? Interest. Inducement of what? Secondary point of what? Interest. Now let's use 15. Now after market creates a lower low here, look at what market did. Created a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. This is a lower high, then a lower low. The market gave what? A minor break of structure here. A minor break of structure here. A minor break of structure here. So though this one did not what? Run into what? Into this former range to what? Grab any liquidity. So now, since market has given us this BMS, market gave ROTO. Market gave what? ROTO. Now let's use this EU to explain stuffs. Now, this is it. Now, you will notice that after market creates a lower low, a lower high, a lower low, a lower high, a lower low, then we have what? A minor structural what? Break here. We have what? A minor structural break. So after this minor structural break, where did price show sign that it will start buying? Where did price show that first sign that it will start buying? This is where it showed that what? That first sign that it will start buying. This is where it what? It showed that first sign that it will start buying. So since it has shown this first sign that it will start buying, so this is higher high, higher low, a higher high, a higher low, a higher high, a higher low, a higher high. It broke this high as what? Your minor break of structure. Your what? Your minor break of what? Structure. So since market has given us this high as minor break of structure, so now where should you enter? Your area of illiquidity is what? This low. This is what? Your inducement low. Your secondary inducement. This is what? Your secondary inducement. We always have 2 points of interest. So one is what? Your breaker. Breaker of what? Every high. Breaker of every high. So one is what? Your breaker. Another one is what? Your primary what? Point of interest. So these are the 2 major points of interest that we do what? We do consider when you are what? Trading. These are the 2 what? major point of interest that we do consider. Then because market has created this liquidity now, this higher high, higher low, higher high, higher low, higher high, higher low, then a higher high that broke this structure. So now when since market is now ready to buy, it will come and what hunt liquidity on the downside. So before it hunt that liquidity, it will induce liquidity. It need to what induce liquidity, which is what the inducement. So now your secondary point of interest is here. This is the low of that inducement. This is the low of that inducement where market is what you expect market to read before you look for buy, or you look for buy confirmation. Before you look for buy confirmation, and it happened in key zone. It happened in key zone. So that is to show you that is a perfect entry in key zone. So that is in key zone. So since market now broke this structure, your secondary inducement. Why? Because market has create enough liquidity in this upside, which is your secondary inducement after BMS of a high, a higher high. Now it creates so the next low that you expect market to take is this low, where after this first BMS happen. So you expect market to take this low before the continuation of the buy move. So this is where you have that BMS in the upside. This is where you had that BMS. This is your inducement leg. This is your inducement leg. So this is where you look for secondary point of interest, breaker or reclaim block to buy the move as your point of interest. So after that, before you look for a little BMS around this corrective wave, a short-term BMS around this corrective wave, then you look for buy move. You look for your buy move. So this high that we call minor break of structure, that is this area that I will name now BMS or break of structure. BMS. So this high that I call minor break of structure, that is this high of BMS or break of break a market structure. Now that is this very high here. That is this very high. So after that, you notice how it came to induce liquidity in the primary zone. So this is the first BMS here. This is your first BMS here, where it shows sign that it will take this high, this minor break of structure. This is where it showed that first sign that it break this very high. So since market has not showed this first sign here that it will break this very high, or it will give a corrective wave into this range, then it broke it now. So your area of concentration now should be this zone, where it gives this first BMS here, where it gives this first BMS here, this area, FBMS. That's your first break of structure. So your first break of structure. So others will be looking to buy here, but you don't do that again, because you have understand secondary and primary inducement. Because you have understand secondary and primary inducement. Now this is where market gave a little BMS for market to create this corrective wave. So now if this is happening on higher time frame, market broke this low, you call it a minor structure break. So since market give this minor structure break to the downside, you already know the liquidity market will take, which is this very low. You know that you are still on downtrend till it take out this low. You are sure that is on downtrend till it take out this very low. So now what you look for is to join the sell. So after that, this is now your lower low, lower high, a lower low. So after this lower low is formed, market first form SMS. Market first form SMS, but you are not too confident on this SMS. So after the SMS, we have a little break of structure of that SMS leg, but you're not too confident of that. So this is where you see the BMS of the range. This is where you have BMS of the range of this little corrective wave. So since you have this area as your BMS, that means you are looking for what? Buy. That means you are looking for what? Buy. And this is what exactly in what New York key zone. So you join the buy from the SC. Again, inducement of primary and secondary point of interest again before this buy move. So now you join the buy. So if now, let's take for example, you join this buy from this area. You join this buy from this area. As a scalper or as a day trader, your target should not pass this high. So this is where you take profit. This way what you take what your profit. This way what you take your profit. Let's say your SL is 5 pips, which is this very low. So this is where you take your profit. This way you take your profit. This very high. So this very first high here is where you take your first partial. If this one here is not closed up to this extent, this is where you take your first partial. So if this one is closed, if this one is, let's say, a bit higher, more than this level, that's where you close your full position as what? A scalper or a day trader. You are off for that New York session. You are off from that New York session. You are off for that New York session. So you have taken your trade. So after that, now, after that short BMS of that area, we got a major break of what structure? We got what? A major break of structure. That means market has given us sign that is ready to give what? A deep pullback on H4, on H4 time frame, which is this very high. Which is this very high. Which is this very high. So after that, it creates a high, a low, a high, a low. You have not seen a BMS. Without BMS, that means market is not ready to what? Induce secondary point of interest. So now, if there's any BMS on higher time frame, where you should target is this very low. Where you should target is this very first low here. Where market gives this what? Major BMS from this downside move here that we got here. So this is where you should target as your what? Your TP if you're selling. Now here market gives a higher high, a higher low. Now let's continue following that M5. So we don't miss anything at all. So after market gives a higher high, a higher low. Now let's use M3. Cool. Now after market gave this higher low, you notice higher high, higher low, higher high, higher low, higher high. This one also induced liquidity based on this time frame. Higher high, higher low, higher high, higher low. So it came to induce that first one that market first used. After this first BMS here, this line, after that first BMS, market induced that liquidity before buying. Before this, before you see this up move, it induced that liquidity. It would induce that very liquidity. So that means based on this time frame, your first target if you're selling now should be this area. Should be what? This very area. Now after that, market now creates a high, a low, induced liquidity again, a higher high. This was the former range that we got in the last BMS. So now market now came back into the range to use secondary point of what? Interest, which is always what? Breaker as your secondary point of interest. Secondary point of interest is always breaker and reclaim block. So after that, now market created what? A new higher high. Market create what? A new higher high. So since market create a new higher high, you already know that we always pick 2 points of what? Interest. Secondary and primary point of interest. Your primary point of interest is where market show the first sign that it will what? Buy. So where is the first sign that market will buy? This is where it should the first sign that it will buy. So if market now, because market has already created a distance and momentum here in this buy move, there's enough distance here. That means market is not using the what? The primary point of interest. That means it will use what? Secondary point of interest. So secondary point of interest, you consider it with structural range around this area, use it to what? Look for reclaim block or breaker. So if this area now is your reclaim block, you can use in line of that reclaim block. If there's anything like base candle that market form in line of that reclaim block or breaker block, which is around this area, in line with it on this right hand side, to pick your point of interest. So now your inducement leg of secondary inducement should be this first this first low that market creates, higher high that did not induce liquidity. So this area now should be your secondary inducement, this very low here, this low, higher higher low, higher higher low, higher higher low, higher low. So since market now is ready to to sell, since market is ready to sell, your inducement low should be this very low. There you should look for buy. There you should look for buy. So this is what we call secondary inducement. So after market induced liquidity, it run into secondary point of interest, or this very base candle here. Base candle means before market breaks structure, it creates a little pullback before breaking structure. That is base candle. So it run into this base candle before buying. So after buying again, you have your higher high. A higher high was formed here. A higher high was formed here. Now look at it on this time frame. A higher high, a higher low, a higher high, a higher low, a higher high. Then this is secondary point of interest. Secondary point of interest, you mark it out. Secondary point of interest. Here we have imbalance reclaim block. We have imbalance reclaim block. We have imbalance reclaim block. So now this is your secondary point of interest. Market create a higher high, a higher low, a higher high, a higher low, a higher high. So when market break this low to create a little lower low here, your concern is not about the sell. You know why? Because it has already created liquidity for itself for this what is it called? For this secondary point of interest to hold, to use it at as inducement. So market now use it to induce liquidity. Market now use it to induce liquidity. So it creates a lower low, a lower high, a lower low, then a higher high. So from that very higher high, so if you enter from this very area as a scalper, let's say you saw the setup on this time frame, your stop loss is, let's say, around this area. Now you are targeting your TP should not be too far. Why? Because this is lower time frame. So you should not be like taking a setup on 30 minutes time frame and you're expecting market to go and hit 4-hour structural range high that you are targeting. So because this setup is presented on this 30 minutes time frame, this is the time frame you take profit as a scalper. So you take it as a long term. So now since market has done this become a lower high, a higher low that on this time frame at secondary point of interest. Now you consider this low here. Now did this low have any characteristics of our major liquidity? That is the first time. Now after that, market now broke this low here. So that secondary point of interest has already given you some good RR or some good profit. Now since market has broke this minor structural range here now, since market has broke this range, so if market break this low, that means you are market is ready to take out the next external liquidity, which is the first low in this uptrend. So that means market has changed completely to downside, to induce primary point of interest or secondary point of interest. So if market broke this low, where you should be looking for buy again now is for market to read all this low, before you start looking for buy again from this very first point of interest area. So this is where you start looking for point of interest again, your SC and others primary point of interest. So since market now broke structure to the downside here, now your next point of interest is inducement of primary liquidity, which is very low. So now a lower low. Now notice how we do count that liquidity. Here you have a lower low, in this downtrend that happened here, a lower low, a lower high, a lower low, a lower high, a lower low. The market did not, this one did not create a higher high. It created what? A lower high, then create a shift of what structure. So it did not create a lower low. Create what it should before breaking structure here. Before breaking structure here. So before after this now, where you should what consider as what inducement low is this very low. Is this very low. So that means from this low to this area is your what point of interest, is your primary point of what interest, where you start looking for what your primary point of interest. Where you start looking for what your primary point of interest. That is what your primary point of what interest to join the buy, since the order flow is still toward what outside, or if it break this low, that means you are what you have changed your trend. But if it didn't break this low, even if you're expecting it to break it, the first thing is what you will have that patience for it to break this very low before you call it what a break of structure. So after that, now we have a minor structure break here. So since market has now broke this low, you expect market now to create a lower high. So now here it creates, after this minor break of structure, it creates a little range structure. Lower high, lower high, lower high, lower high, a range structure here. So now it broke that low. It broke that range structure here by this high. By this very high. So since it broke this very high as minor break of structure, for market to give us a corrective wave to the upside, that means it's going for primary point of interest. Your primary point of interest in this area for market to what go and induce this very low. For market to go and induce this very low is this very candle, your SE candle, your sponsored candle. That's your primary point of what interest. So after market broke this low, it creates what a distance and momentum. Distance and what momentum here. It created distance and what momentum. That means after BMS of this high, it didn't instantly come for ROTO. So it created a little what distance. That means it would use secondary point of what interest. So you pick your secondary point of interest, which is what the first breaker candle. This is your primary point of interest, your SC candle. So this is how you pick your point of interest. This is how you pick your what point of interest. Secondary and primary. These are the only 2 points of interest that we do use. Inducement of them. So now if there's any low on, let's say on M1 that's around this area, that low will become what your secondary inducement. So if you are selling, after market give you any sign to sell from here. So if you are selling, that low should be what your target before you start looking for buy. Before you start looking for what buy. So now look at what market did here. After this BMS, it creates a lower high, it creates a higher high, a higher low, a higher high again before creating a lower low. Before creating a lower low. Now this lower low it creates here because we are already on a short-term downtrend for market to induce this low, to induce that very low. So after that, market induced that liquidity. After inducing it, create a low high, lower high, a lower low, lower high, lower low, lower high, then a lower low. Now you have what minor break of structure again. You have what minor break of structure again. After minor break of structure, this is still our external liquidity, which is our what our nearest high. This is still our external liquidity, which is our what our nearest high. That is where we are targeting. Or if market break this major liquidity, that means you're what on downtrend. That means you're what on downtrend. Now market now, boom. After that, it gave what a momentum and distance. There's a momentum in this buy move, and there's what a distance. So once there's a distance, it creates a little liquidity within that distance. That means it will use what secondary point of what interest. So you focus on what your secondary point of what interest, your breaker or reclaim block as your what secondary point of interest to join the buy. To join the buy. So anything market is doing till what it induce into that secondary point of interest, and you consider what key zone. So after that, market now consider it boom, lower high. Look at it, lower high, lower high, lower low, lower high, lower low, lower high, then create a lower low. After that lower low, it broke structure here. So this will give you what a confirmation for what buy. Then after this buy, you consider time, which is what? Key zone, where we do what? Take entry at what? Key zone. So once market is in what? In key zone, then you look for what? Buy at the what? SC candle. Because there's no distance after this BMS, there's no distance. Market did not create another liquidity. That means you will not use secondary point of interest of this BMS high. That means you will not use secondary point of interest. Why? Because there's no what? There's no distance. So after BMS, it's instantly it's already coming back. So where are you going to wait for it? Primary point of what? Interest. But if instantly BMS, after BMS, it gives a distance, you already know what it will do. So this distance and little liquidity is creating. You call all this one liquidity. You call all this one what? Inducement. So for market to use what? Secondary point of interest and continue buying. So after this BMS, now market came back to primary point of interest. So if now you are taking this buy, this should be what? As a scalper, this should be your first target. As a scalper or day trader. We talk about swing trading. Now, or as what? A day trader. You are already out because your high has been what? Taken, where you are targeting, which is that very high, is already what? Taken. So you are out of the market. You don't force settle. So you are out of the what? The market. You are out of the market. So this is the very high. Or you can add extra, let's say 10 pips above that high based on ICT. So after that, market create a high, a low, a high, a low. Then they say what? A distance and momentum here. They say distance and what? Momentum, so that we see this clearer. Let's use M15. So now there's what? A distance and what? Momentum around this very area. So after market broke this high, okay, sorry. After market broke this very high, so after market broke this high, you know that we always use 2 points of interest, primary and secondary point of what? Interest. So market now create this higher low, then create a higher high. So where is what? Your secondary inducement. If you are selling from here, market after market give out this minor BMS here, minor BMS here. But this is a risk sell, a risk what? A risk sell. Why? Because this high did not create any characteristics of it giving what? A good pullback, for it to give what? A good pullback. So if it has something like a good, like let's say create what? A hunt of liquidity or a stop hunt before breaking it below like this, breaking this area, that means you already know that is what? Going to give that sell move. So you can take the sell. But if it didn't give that, it give a higher high, higher low, there's no characteristics of what? Of this high being a strong high to give a good pullback. So if there's no characteristics of that, you don't look for that sell. So you fit that sell, you focus on the buy. So now if you are focusing on the buy, for market to induce liquidity into this formal range, where will the liquidity be? This is the low of that what? Secondary inducement. Because there's already distance and momentum in this, you still use secondary point of interest because there's already what? Distance and what? Momentum. There's already distance and momentum. So you'll not be waiting for market at what? Primary point of interest again of this low, which is this very area. You'll not be waiting for market at this what? Primary point of interest again. Why? Because market has already created liquidity to use as what? Inducement, as what? Secondary point of interest after this what? First break of structure. After this what? First break of what? Structure. So market now induce this low, now break a minor structure around this area after what? Inducing liquidity. So now this will what? We give you what? A privilege to what? Join this very buy move. To join this very buy move. So as a scalper, your next target is always the external liquidity. As a scalper, if you're a swing trader, if this is happening on higher time frame, on daily time frame, on H4, you are good to go. This is always your target if it's happening on higher time frame. The same process of a scalper, that is what you use on what? Higher time frame. But you always use it as what? Swing trading, so that you know what? Make mistake, because some scalpers you can easily make mistake because it's on lower time frame. So sometimes you'll be like trying to sell this move, you forget about this buy move. So those are the things. So just try and understand the model that you are trading, primary or secondary point of interest. That is your point of interest. Inducement of what primary and secondary point of what interest. So after that, boom, market now break a higher high. Market now create what? A higher high. Market now create what? A higher high. So after market create a higher high, your idea or your main agenda is to look for the buy. You already know that. So as you are looking for the buy, where do you select your point of interest? Secondary and primary point of what? Interest again. So once you select that secondary, there's already momentum and what? Distance. There's already momentum and what? Distance. So if market is now coming for this primary point of interest here, primary point of interest here, this low that you used to enter this buy move here will be taken. This low that you used to enter this buy move here will be taken. If market would have come for primary point of interest, this low, it would have been taken, but it will not take this low. So that means you have what? A shorter stop loss. A shorter what? Stop loss. If this low will not be taken, but you already know primary where market gives the first sign of BMS to the upside for market to take out this high. So that is your primary point of interest. Where you give out that first BMS, that low that give that sign of that first BMS is always your inducement leg of primary point of interest. That means market will come and what? Induce it. Market will come and what? Induce that very low before you look for buy. So now market came, create a little range structure, continue. You already know what, because there's momentum and distance here. There's nothing like a clear structure here. There's no characteristics of a strong high here. So you are not looking, your concern is not about the sell that's happening. So your major concern is what? Your buy. To look for the buy move. To look for the buy move. So after market consolidated around this area, created a little stop hunt. This was a little stop hunt that happened here. Okay, it's not a real one. So a stop hunt means when market creates something like a double top, let's say if this were to be a real double top, then hunt it later, then before breaking structure, then you already know that this is now what? A sell. But this sell is not a long-term sell. It's what? A short-term sell for market to what? Grab liquidity into secondary point of what? Interest. Then you look for buy. So that is how you follow structure. Exactly. That is how you follow structure perfectly. So after that, market now came for what? Secondary point of interest again. Though it didn't get up to secondary point of interest. Why? Because of the news that happened. That was FOMC news. So if news is happening, you should be very careful. If news is happening, you should be very, very careful. So you stay out of the market. So after that, market continue what? After break of structure of this range, or this very high. So it started creating a range structure, higher high, higher low, higher high. The news was still, because it's FOMC news, so it was still strong. So you create higher high, higher low, higher high, higher low. You continue following structure on that lower time frame as what a scalping move. So after that, we had a little break of structure here, though it did not give any characteristics of what a strong high. So we had this a lower low, then market creating another higher high. That means what? It hunted liquidity after this BMS. Look like a BMS to the downside. So it hunted liquidity on this upside. That is the first characteristics of what? A strong high. So it hunted liquidity. Now, since it has hunted that liquidity, that means you have gotten a BMS here. So where is your next range? Where you what? Take your profit out. This inducement leg. So if now you are looking for more buy, market is not ready at your sell zone. Market is not yet at your sell zone. So if market now take at this low, that means you have gotten BMS to the downside. That means you have gotten BMS to the downside. But if market has not taken this low, that means you are not yet what? On downtrend. You're not yet on what? On downtrend. So this now become what? Your secondary inducement. Where you what? Where you look for what? A short-term buy move. Where you look for what? A short-term buy move into the what? Former range. Into the former range. So boom. After this now, a short-term buy move after this inducement. So if we create a higher high completely, your structure become still what? Intact. Your structure still what? Intact. Your structure still what? Intact. You follow it completely based on what market is doing, based on what market is doing. So that is it. That is about structure. Now let's look at EU. We see example of what EU did last week. So this is, let's use 15. Okay. Now on higher time frame, on daily time frame, you already know that on EU we are on what downtrend. All this while we are on downtrend. So after that downtrend, markets create a lower low here, create another lower low here. Now let's go back to that lower time frame on this time frame. So you see what we are saying. Now on this time frame, on this time frame, okay. So on this time frame, we notice that formally we are on downtrend. So before that, after that downtrend, before market give us this reversal move here, notice what it created here on this 5 minutes time frame. It create what? A double bottom. It create what? A double bottom, which is what? What characteristics of what? A strong low or a strong high, external liquidity and what? Major liquidity. So now since market create this, after market create this, use it to induce liquidity around this high, create a lower low, haunted it here with this low, haunted it with this low, haunted it with this very low. So since market has haunted it around this area, since market has haunted it around this area, then after hunting it, we give a little minor structure break, which was around this area. So after that minor structure break, it came for primary point of interest, then continue buying. It continued buying. So since now, this is where market gave that first sign of what? PMS. You will notice something here. Around this area, market create a low, a high, a lower low, a higher high. So that means this is what will be what? Primary inducement. If market is coming for the primary point of what? Interest. So this will be what? Your primary inducement. This will be what? Your primary inducement. That means market will take that very low. Now, market create a higher high. So this is where it gave what? A strong higher high. Let's say on M15. Let's say on this very time frame. On this very time frame. So this is major BMS, where we have a major BMS. So any low that is created below this is what? What? Your inducement low. Is your what? Inducement low. Note that. That is what? Your inducement low. You already selected your primary point of interest in future. Now, after that, we are still on downtrend. Market has not violated structure. So we create a lower low, a lower high based on this time frame, M15. So this is our lower low. This is our lower high. So this is our new lower low. So we expect market to create now a lower high. So with the help of the news on this M15, we got what? A minor structural break here. So since we got this minor structural break, so where did market show the first sign that it will break this high? This is it. This is where it showed the first sign. This area, BOS. So this low, any low that is created above this BOS will become liquidity. Any low that is created above this BMS will become liquidity. One of it is this one. This one here. One of it is what? This one here. Now, that is one of it. And here you have what? Your SC candle. Your SC candle. That is, sorry. That is your what? Your SC candle. Here you have your what? SC candle. That is your primary point of what? Interest. Where is your what? That is what? Your major concern. That is your what? Your major concern. So since now market has given us a minor structural break above this on this M15, now your primary inducement is this low, because there's no more after BMS of this high. Market did not give us momentum and distance, so that means market is using primary point of interest, which is this area. So after that, market creates a lower high, a lower low, a lower high, a lower high, then create a lower low, a lower high. Then after that lower high, look at what market did. Market gave what? A minor BMS. Market gave what? A minor BMS. So after minor BMS, it create a high, a low, a higher high. So now, where is the inducement low that market will induce here? You should understand that this is the first inducement after this minor BMS that market will do. So that is why market after what? Breaking this high, higher low, higher high, it came back to break this low to use it as what? Inducement. To use that as what? Inducement. So this is where you start looking for what? Your point of interest, where you can use Asian range rate, or all those stuff. So after that, now market create a higher high again. Market create a higher high again, a higher high. So since now this is your major target, where you are targeting, where you what? You are targeting as your what? External liquidity. Now, since this is where you what? You took your first entry. Now, around this area, before market break this high, so because from this range now, you already know what market is doing. This is a lower low, a lower high, a lower low, a higher high. Now, market break structure based on this intraday time frame. So we have intraday break of structure here. We have what? Intraday break of structure here. So since we have gotten that intraday break of structure, that means that point of interest has head price. That means that point of interest has head price. So you wait for what? In key zone. So this entry here was in key zone, London key zone. This buy entry was in London key zone. So after that, then boom, you look for buy again to target this external liquidity. So after that, market now create a high, a low, a high, then a lower low, a short BMS, a short term what? BMS. So since there's no enough liquidity here and there's no enough momentum and distance here for market to use secondary point of interest, the next thing is what? You wait for primary point of what? Interest. Primary what? Point of what? Interest. Primary point of interest. Now let's use M3 so that you see the primary point of interest, how you use it with characteristics of what? A major and external liquidity. Now, you already know the high we are targeting, but market has not yet taken that high. So that means we are still within that structural range. So now you will notice something like here, this is unsupported high. This is unsupported high. Market came to read it, below it, run to this former range on M1. A little short them buy to break out this external liquidity. So after that, now market now came back. As market was coming back into this what? Liquidity, into this liquidity range. Now this is inducement of primary point of interest around this primary point of interest. On M1, let's see that on M1 so that you see what we are talking about clearly. Okay, on this M1, so on this M1 here, so market create a lower low, lower high, lower low, higher high, lower low, lower high, lower low, a higher high. So that means market gave us this area as what? First BMS. First sign of what? BMS. First sign of what? BMS. First sign of what? BMS. So since this is a first sign of BMS here, that means this low that it's used to create this corrective wave here will become liquidity, where market will come for this primary point of what? Interest. Where market will come for this primary point of what? Interest. Just like what we marked on that when we start using this EU initially, we have marked it out now. So if market is coming for primary point of interest, it will use the, but there's already a momentum and distance on EU already. So we are not coming for that primary point of interest until EU is what? Is done buying. So if you're selling again, unless it's going to take out that what? External liquidity, that is that low. So that is that. Now, after that, So now you know that this is now what your inducement leg. This very low is your what inducement leg. So since that is your what inducement leg, market broke structure here around this area, then it continued creating a lower high, lower low, lower high, lower low, lower high, till what it get to this very point. It raided that very liquidity with 1 pips or 2 pips. It raided that very liquidity with 1 pips or 2 pips. Now, before it raided that liquidity, it creates something like a double bottom again. Liquidity what hunt or what a stop hunt. So it created this what stop hunt around this area before breaking structure. So that means this is now what another break of what structure. That means this is another what break of structure. That means market has already worked with us. So you look for what your next buy move. So boom, you take the buy move in key zone. This was it was in key zone. So I entered around this area after market induced this liquidity. I entered around this very area, this buy move. So I already know my standard liquidity, which was on M15, which was what on M15, which is this very high. So that is your target as what a scalper. So after market took that high again, it created a high, a low, a high, a minor structure break again. So since it gave this minor structure break, that means you are what a short-term downtrend, a short-term what downtrend. That means you are what short-term downtrend. But you are short-term downtrend. Where are you waiting for what market to induce liquidity? This is it, because this is what a strong major liquidity. Why? Because it's what haunted, it's top haunted liquidity here. It's a major what external liquidity. It's major external liquidity. What? Why? Because it's top haunted liquidity because of that double bottom that you saw on that M1. So that means this is what a major higher low. So that means market will not read it. I don't know if you're understanding me. So now that means what that is what a major external major liquidity. So market now came with the news, induced that low after the first BMS. So always your primary point of interest is always below that low, where you would take the next buy move. So after that, market now broke structure. Market now broke structure. We have time frame difference. So on that time frame, on that 1 hour time frame, we are in short-term uptrend. Till market now rated this very high. So this is a major hit for higher high. So here we have what a major break of structure. So since this area, we had this area as our what major break of structure to the upside. So our market has already created momentum and distance. So now let's look at it on M5. So you see clearly. So now here markets create a high, a low, a high, a low, a high, a low, a high. So all these lower high that you see here after market break structure, you consider them as what inducement of secondary point of interest. So market now after that, market came to what induce all of them. After inducing them, it used to what create a higher high. After inducing them, it create what a higher high. Now after inducing them, create a higher high. Market now create a high, a low. Now after this high, a low that market created here, market now create all this what range structure here with structure continuation, higher high, higher low, higher low around all this area. After that, the same process here. After breaking this high, so market create a high, a low, a high, a low. That means secondary point of interest inducement. So but normally I was expecting it to read this very low here, but couldn't read it. So boom, before creating this higher high. So after that, boom, it continued. This is what we call secondary and primary inducement. This is what we call what understanding of what secondary and primary inducement. So after that, you continue using it to what trade structure. The same thing, even if market will give a pullback, you use that secondary and primary what inducement. So once market creates a new higher high, Now higher high, higher low, higher high, higher low. So here now, this where the setup first failed to show you that it will not hold again. This buy move will not hold again. Why? Higher high, higher low, higher. There's already what? Liquidity, distance, and what momentum here. So that means it will use secondary point of interest to create what? A higher high. So once it induces this, if you get anything like minor BMS on lower time frame to give this sell, this is your first target. So as market is giving this sell move, yeah. So as market is giving this sell move here, now you are what? Your next agenda is what? Where you should what? Look for what? The buy move, which is what? Your primary point of interest, which should be this area. Which should be this area. So if you are looking for that, this is a lower low, lower high, lower low, lower high. There's already momentum and distance. So this second point of interest failed here, and primary point of interest also what failed. That means you have gotten what? A real BMS to the downside. That means you have gotten what? A real BMS to the downside. So since you have gotten a real BMS to the downside, where was their last range where market did not induce primary and secondary point of interest? This is it. So this is where you want your target. This is where you want your target. So this low is your what? Your major target. So this will become what? Inducement low of this former range. So you pick your primary and secondary point of interest of that range. Your primary point of interest was where price was where price start buying here now to the former range. So this is how you trade structure till what it would give you otherwise. So from this area now, you already know that this is your next external liquidity. That means you are not yet on downtrend. You're not yet what? On downtrend. This is your next external liquidity. So your major focus is the buy move, not the sell move. Your major focus is the buy move, not the what? The sell move. So that is how you follow structure till what? Market has what? Proven to you. Till market has what? Proving to you that is what? Ready for buy, for sell. So you follow structure. Exactly, you follow structure. So now if market is now coming for what? If market now, after that low is being bridged, so where should you look for another entry? Is your secondary point of interest, which is around this area, and that last area that we picked. On that lower time frame as your what? Where market showed the sign that it will break this very high. So where did market show that first sign that it will break this very high? All these are what? Liquidity. So all this one will be forfeited. So people that enter here, if market did not use secondary point of interest now, after getting the secondary point of interest, it did not give any minor break of structure at what point of interest. It did not give any minor break of structure for market to continue. So if market did not do this, people that enter here and still holding their trade for long-term trade, you must be what? Very conscious that after every BMS of a high, you have already taken out what? 80% of your position in case market what? Come for primary point of what? Interest. This is how you trade it, and that is how you understand strong external liquidity and strong what? Major liquidity. So that is that. Now let's look at good. Same process. Now on good, based on what we call unsupported high and unsupported low. So this is unsupported high. Because why? There's nothing that is holding this high. So on M15, there was what? A high that was around this area. There was what? A high, or let's use M45. So you see that clearer. So you see this area above the unsupported high. So if you have two unsupported high, you use the former one as what? Your point of interest. If you have two unsupported high or two unsupported low, use the first one as what? Your point of what? Interest. So now after that, market get to this point of interest, create a higher high, higher low. So this is where we have what? A first BMS, or as a minor BMS. So since this is where you have a minor BMS, so your point of interest should be what? This very area. So should be this very area. So you can pick it like this as your what? Your point of interest, your higher time frame point of what? Interest to join the sell. Your higher time frame point of interest to join the sell. So now, since this is your higher time frame point of interest to join the sell, now market was creating a lower low, a lower high, a lower low, a lower high. Now market here broke a structure to the downside. So after breaking this low as what a BMS, because if you notice structure here, you're having a higher high, a higher low, a higher high, a higher low. So since this is a higher low, we had a higher high. Now we have a lower low. In terms of structure, this is in terms of structure. Now this is our minor structure break. Now this is our inducement high. Based on this, before you start considering this as what inducement, it must surely take out this one first before you start considering it as what inducement. If you didn't take this one out, you don't consider it as what inducement. You don't consider it as what inducement. So now market creates a lower low here. After that, after breaking this low, it induced liquidity on the upside, break structure again. The same process. Create lower low, lower high, lower low. Came for what? To induce liquidity, which is this very high. To induce liquidity and run toward primary point of what interest here. It used primary point of interest here. So after the primary point of interest, it induced primary point of interest liquidity again based on this range before creating a lower low again. Before creating a lower low. So after creating a lower low, market creates a lower low, lower high, a lower low, a higher high. Now to what induce liquidity of primary point of interest, of secondary point of interest, because this is a lower high, lower high, a lower low now. Now this is what a strong high. This is what we call a strong high. You know why? It what after this minor BMS that we had here, after this little BMS of this high. Let's use M15. So after this minor BMS that you had here, this is that first one that that is liquidity hunt. So it creates a high, a low, a high, a lower low to induce liquidity on this downside before creating a higher high. So that means what? It hunted this very high. It hunted this very high. Let me show you that. It hunted this very high as what? Inducement. It hunted this very high as what? Inducement. So it hunted this very high. So after hunting this high, it creates what? A lower low to the downside and broke what? A major external liquidity. So now when market break it, that means market is ready to what? Go for what? For what? Primary point of what? Interest. So after that, where did market give you the first sign of what? BMS. This was it. That it will break that structure high. So after BMS of this high, there's no momentum and distance. They didn't create momentum and distance. That means what? You are waiting for what? Market to come and induce liquidity, which is this very low. Which is this very low. So after inducing this low, before you start looking for what? Your buy move for market to take out this external liquidity again based on this time frame till what? It induce that primary liquidity, which is this area, before you start looking for any sell again. So market induce it with the help of news. Came to primary point of interest with the help of news at a little buy move, then went for that what? Primary point of interest before continuing this one, the sell, before continuation of the what? The sell, which is what we are doing now. So on this trade, we are still on downtrend based on what? Structure. Based on what? Structure. Don't include anything like Wyckoff. Keep it what? Simple. So based on structure and inducement, which is the Terra model. One, primary and secondary inducement and what? Unsupported high. So which based on that, we are still on downtrend. That means you're expecting market to what? Now create a lower low, create a lower high, then continue to the downside till what? Market proves us what? Otherwise. If market proves you otherwise, you follow structure. Exactly the same process of inducement, primary and secondary point of what? Interest. So that is that.